In this video we are going to be analysing Blue Apron ticker APRN. Now this was a really big move, just going back a few months, but it is starting to gain some traction again. I'm seeing a lot more people talk about it and are interested in it, so that's why we're doing some analysis on it today. Now, as a day trading opportunity, is it really providing anything? And I think this chart kind of says it all. This is just a 1 minute chart, intraday chart. It is a barcode stock now. Doing it intraday just be very tricky. You can see it's doing about 7,000 shares per minute, which again isn't moving enough to really provide any day trading opportunities. So if it was something I would be looking at, it's going to have to be more of a swing trade. Now it does provide some options, so again that can be one way to trade it, which is always a nice thing to see. But the key thing I guess going forward is, where are the trading opportunities? So if we continue to sell off, the only trading opportunity I have to the downside is at 35 cents. Now this is our second deviation on the 6 month coming into this level. Again, at a minimum I would expect a bounce, but could also be a reversal level. So if we push down that low, again that's my trading opportunity. So if I'm looking to trade it long bias, I'm going to be very patient. I'll be waiting for it to hit 35 cents. And you may be watching this saying it's never hitting 35 cents. It's fallen from $12.75 down to $1 within a year. It can easily fall another 65 cents. And that's the thing. I know a lot of people are probably going to hate on that sentence, but what is your position on the stock? I'm guessing you're a bag holder if that is your view on the stock. But let me know in the comments, because again, whenever I do these kind of analysis videos on these kind of stocks where they've fallen 99% of their value in a year, you get a lot of hate on them. No matter what channel you are, you get a lot of hate on them, because unless you're green, you're saying it's going to the moon, people hate. So firstly, that's the thing. If I'm trading it to the downside or waiting kind of for a long bias opportunity, 35 cents is the only level I'm paying attention to. Maybe some trading opportunities off the psychological levels as a day trade, but again it will be all how is volume looking at intraday, and that'll be at 50 cents and 75 cents. Again, obviously key psychological levels, expect bounces, but it's whether the liquidity and the volume is there to back up that trade opportunity. At 35 cents, I would be happy a bit more to kind of take the extra risk. If there isn't tons of volume, there isn't tons of liquidity, if the spread's still less than a cent or two, well, a cent to 2 cents, there is definitely still trading opportunity. If it breaks, you just have to kind of be, I think with this, willing to lose what you put into it. So if it was something I'd trade, maybe I throw in maybe a max of say $500 to $1,000. If I lose it, I know going in that is my max risk. I can afford to lose that. But then if it obviously does bounces to $1, $2, then again you still have really good upside. You can still make good money on that kind of trade. So that's how I'm looking at Blue Apron ticker APRN. But now, if we push to the upside, what are key levels that we're paying attention to? So, and kind of I think will provide the easy trading opportunities, and that's going to be 175. And why is this going to provide a good, or as I said, kind of easier trading opportunity? Kind of two or kind of three main reasons, I guess. Psychological level, obviously it's under $10. You tend to see big movements at kind of 50 cents and $1. But even 75 and 25 cents, you tend to see a bit of movement. So a bit of a psychological level. Gap fill, gap fill location. And also our first deviation on the 6 month chart. So really three really key kind of reasons for big movement to happen there. So again, the first time we tap that, I'm looking to play that reversal. If there's liquidity, again, I'll be looking to trade that pullback to at least $1.50. So again, definitely a good trading opportunity, but could definitely go lower than that. Now though, if we break this, again, what would I be looking for? And kind of as well, if I was short, for example, if it just breaks straight through, what is the way I'm going to really be looking to stop out? And the way I usually look at this is if we break through, come back to retest as a support, and you see buying pressure come in and it starts pushing up, that level was held and we are going higher. So that's when I would cut. If I was short, I'd be cutting out of any position I had. And if I felt like taking it or flipping or reversing my position, that is when I would flip more long bias. If you come back to retest it and it holds, good indication, it's respecting the level and you expect to move higher. You do have a level at 192, again, not something I would look to really trade off, but be paying attention to it. If you start seeing it struggle around this level, that's why. But really, it can provide a good upside opportunity. 312 is that statistical mean. Going high would be 416, then 450. Going high would be 590, 640, going on to 730, 860, and a final level at 1080. Now, like I said, I would be cautious trading this kind of stock, but there's not to say there isn't opportunity here. Again, if it pushes down to 35 cents, to me there is opportunity. But what can really provide some good opportunity as well is even if we start breaking to the upside. I mean, within this range where we are now, there to me is no opportunity. But if we can break really $2 is kind of $1.75 to $2 is kind of the key thing I'm looking for. If we can break this level, come back to retest this level as a support and it holds, really there is some good opportunity. Let's say you get in late, say you get in at 210, which again would be quite a late entry, especially if you're waiting for that retest at 175 and you have your target of say around $3. That is 40%. Again, that's not even trying to catch the bottom to the peak. That is cutting out probably about 25% of that move. You can even see what would the actual move we'd be looking at, and then again, what was that? So the actual move is 77%. So again, even if we just capture really half of that move, there is great trading opportunity there. It's just being patient enough to wait for it and how you're executing it. Again, you can trade it through options, you can trade it through outright shares. Either way, these were the things I'd be waiting for. I would be patient waiting for these levels because this is where, at least how I view stocks from a technical standpoint, there is opportunity. But again, it may push to these kind of levels, definitely possible, but be watching how is it moving there firstly as well. Is it moving off technical reasons or is it moving off fundamentals? Because the fundamental thing is always going to be the key thing is, again, fundamentals drive the market. So if you see big fundamentals come out, it's probably easier just to join direction, at least for the day. And then as it starts to calm down, then you can move back to the technicals. And again, let's say we break straight through here when a fundamental news dies down, you start to see that pullback. $2 could be that entry, and then 312 would be that target. So again, just different ways to kind of look at the stock. How you're trading it, again, you need to be prepared, whether it's a technical or fundamental trade. There's different reasons and different ways you would trade it. Again, always have your own trading plan, but these are just the levels I'm personally looking at. Anyway, hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.